Good evening, everybody. Thank you for the opportunity. 3 years since I last did this with this group. Lots changed at Porvair. Results are very fresh. We're on the second day of the annual road show. We've been following exactly the same strategy at Porvair for just over a decade now. It's one of niche positions in growing and regulated markets, and it's one of new product development to drive organic growth. Over the last 6 years, you can see the numbers there, and over the last 12 months, you can see the numbers there. We entered 2016 in quite good heart. We've got cash on the balance sheet. We have growth, underlying growth of around 7%. I'm sorry about the underlying bit. We don't really like weasel words like that, but we'll get to that. And to shoot right to the conclusion, 7 to 9% is about what we can drive this business along at for the foreseeable. It's an engineering business, it's not bioscience, but I'll put some support to that as we go through. So, this is one of the slides where, once you get this, frankly, you get the whole of the rest of the business. So we make filters, we make specialist filters, the sorts of filters that protect much more costly and complex downstream systems. And that gives you a number of business characteristics, all of which are encapsulated by a very simple sort of premise, which is I'm trying to sell you a filter for your 737 or for your nuclear power plant or whatever it is. You and I both know that the performance of the filter is going to be more important than its price. It simply has to work. It has to work for the hour, for the week, for the year, whatever it is you need it to work. And that once you understand that about the sorts of things that we make, everything else falls into place. Because from that, you get some very long life cycles. If you're on a 737 undercarriage, you can be there for 50 years. You get a high level of bespoke engineering, very, very small changes, but nevertheless it tends to be a given product for a given application, and you get a very high level of consumables. At least 80% of what we do, we've done before. Of course, the great thing about filters is they're replaced. They might be replaced every day, they might be replaced every year, every 10,000 hours, but you replace the filter because it's protecting something much more costly or complex downstream. The other thing you get, if you get the markets right, is very good, regulated and growing underlying trends to the business. So secular trends, most of what we do is regulated or legislated or subject to some sort of required maintenance schedule. The main point about Porvair, particularly in these sort of slightly skittish times, is there's nothing that we make that is discretionary. If you want to run your process or your plant or your aeroplane, you have to run the filters. You can't decide not to do it, nor can you decide to let them run for another 1,000 hours just in case. And that gives a certain stickiness to what we do, as do the barriers to entry, where it's either design skills, certain amount of patents, around about a third is patent protected, but mostly it's quality accreditation. So we do all the filters that Alcoa use in the world. They could change to an alternative supplier, but they'd have to requalify the metal all the way through the chain, right down to Coca-Cola. And that's an enormous cost and effort for what is a $35 filter. So there's a certain stickiness to what we do. And once you get all that, everything else, honestly, runs fairly straightforward. We have the plainest vanilla strategy you've ever seen in your life. We focus on a few markets, not too few, not too many. We'll go through those in a minute. You bring a new product management process to that simply because these markets will move forward at GDP+, but if you want to go quicker than that, you've got to do it yourself, and we'll talk a bit about that. Geographically, you have to go where the markets take you, into China for water, into the US for aerospace and so on. And then, particularly of interest for this audience, in what is a low capital intense, high cash generative business, you've got to be clear about what you're going to do with that cash over the long term. And for us, it's firstly organic growth. That gives us the best shareholder value. We do acquisitions as and when they become available. In this sort of niche world, that's not often, but we'll talk about a couple as we go through. And thirdly, a progressive dividend. It's quite an important discipline. So that strategy hasn't changed for over a decade. It's done us all right, as you'll see. There's plenty of reason to think it will continue to do so. And it is the framework around which everything else in the business hangs. So the four markets: aviation, energy and industrial, environmental laboratories, and molten metals. I'll go through those in a bit more detail in just a moment. This is what we mean by regulation and market growth. Regulation is really important, it's essentially your first line of competitive defence. It is just very difficult to decide that you're going to make an aircraft filter tomorrow. The level of accreditation you need is an enormous barrier to entry. In the qualification and analysis of water contamination, it's an even bigger level of regulation. So we really like that, and that's part of the reason why we chose these markets. And the other reason is, on the whole, they grow. They don't all grow in a straight line. Some of them are more cyclical than others, but they all have clear underlying structural growth drivers, and that's why we set the business up as we did. The split between the markets is there. That's the sales split. The contribution to profit split is much more equal. It's roughly 25% each, and it doesn't matter how we run the business really. Now, one slide on each of the markets then. In each case, we look at what's the niche position, what's driving the growth, what are the recent new products, because we've been doing this a while. We've got a decent track record of new products, and what's the competitive advantage. And I'll run through these quickly with you. In aviation, we do liquids, so fuels, coolants, and hydraulics. We don't do air, for example. We don't do nothing really much in the cabin. And the growth drivers there, I think, are well understood. It's either new aircraft or the maintenance schedule, and we are about 50-50. We are on every single commercial airframe in the world, bar none. Russians, Canadians, Chinese, everybody has a Porvair filter to a greater or lesser degree. So we're driven by the build rate, famously 7 or 8 years of order books for Boeing and Airbus, and of course passenger miles, because that's what drives the maintenance schedules. So it's quite a nice spread of business, and I think the growth drivers in that case are relatively clear. We've got quite a good new product development track record. We do all the inerting filters in the world, a set of systems that prevent sparks in the fuel tank of an aircraft blowing up. It needs very clean air. We do that. And then we've got quite good positions on some of the newer airframes, 380, 787 and so on. The competitive advantage right the way across the piece, so I won't comment on this again, is always the install base. This is a business where if you are the supplier, it's unlikely that you're going to be knocked off by the competitor. It also means it's quite difficult to knock him off from where he or she is, but the incumbency is everything here. As long as you don't mess up, gouge on price, have quality problems and so on, if they used you before, they're going to use you again. Generally speaking, you are the sole supplier for that filter in that application. Now, it might take you 5 or 7 years to get the first sale, but thereafter it's relatively sticky. And that's the case throughout the specialist filtration world. So that's aviation. And while I'm on it, we're going around the city this week, and there's a very wide range of views as to what's happening in the global economy. I wouldn't for the moment suggest that little old Porvair can shed any light on that. But in the markets that we understand, aerospace looks absolutely fine for 2016. Both passenger air miles and new build rates are such that certainly our schedules are looking good for 16, and our order books are higher than they were 12 months ago. Second market is energy and industrial. This is a less easily defined market. We do hot gas, gasification, we do polymer, nuclear remediation, filters that go into factories specifically. So the growth drivers are a little bit less easy to define. Gasification systems are the systems that take a hydrocarbon material, turn it into synthetic gas. Not so much done in the Western Hemisphere anymore with shale and other things, but still very active in Asia, where, as you probably know, the price of gas around the Pacific Rim is around $12 a decatherm. In the US, it's about $3. It's about somewhere in the middle in Europe. But you can turn coal into $5 gas using these sorts of systems, and we have a terrific position there. I'll come to that in just a second. We do nuclear cleanup. We don't do nuclear power plants. It's not such a specialist job, funny enough, that, but nuclear cleanup is properly specialist. You can imagine any fissile material gets out. We do quite a lot of that. Now, this, I'm going to just dwell on this for a minute because I'm going to come back to it. We've had a really good run here, and compared to 3 years ago, this little bit of the slide here is crucial. This is £51 million worth of work in those 5 projects. E-gas is a sort of gasification technology. These are large power stations where you take either coal or petcoke, you turn it into gas, and there's a tremendous filtration job to do in the middle of that. Now, the average order size in Porvair is about $40,000. We make a lot of small stuff. So $51 million worth of work, is enough to get one's attention. And there are a number of issues with that. There are some in the current numbers, which I'll come to in a minute. But while we're just doing the background, there's two important aspects to that. First is this £50 million goes through your P&L. The cash benefit of that is dramatic, and you will see that when we get to the numbers. and that's been over the last 2 or 3 years. Because these are filters, the real net present value is not so much in the initial 51 million, it's in the replacement parts. So these are gasifiers, so they're big units. There are 16 of them in all, in and amongst that. Each of those gasifiers takes $1.5 million worth of filters, and the filters will be replaced every 2 years. These plants will run 20 or 30 years. Net present value of that is significant in Porvair's terms. So that's for the future. In the near term, we'll come to the effect of that on the current numbers in just a moment. So just bear that in mind. Competitive advantage is no different. Environmental laboratory supplies is the third area. This is water. Environmental laboratories concern themselves with water quality. We have a very good position in the analysis of inorganic contamination in water and the filters that go around it. And the growth drivers there are ever tightening water quality standards. Only 3 countries in the EU actually comply with the EU Water Directive. China, 21% of the world's population, 7% of its fresh water, only less than 1% of that clean. $750 billion in the latest Chinese 5-year plan is going into hydrology and cleaning up their water course. And 1/3 of what we do here is exported from Germany into China. This is a very nice, solid business, and certainly in terms of current trading, there's no change likely in that in 2016. So that's the third area. And the fourth area is molten metals, metals filtration. All metals are filtered to some degree. We have a global position in aluminium. We have regional positions in iron and superalloys, which are used in turbine blades. This is quite a specialist line of work driven primarily by aluminium consumption. We have a range of patents around it. This ought to be a much higher margin line of work than it is. It's about 10% operating margins. And the reason it isn't is that it's Porvair selling to all the major aluminium smelters in the world, so Alcoa, Rio Tinto, Chalco, and so on. And we just find it very difficult to get more than a 20% premium over everybody else in the market, which is roughly what we achieve. So it's a nice business. It's growing. It's a very high cash generator for us. So it's a niche area, but it is slightly different from the other stuff that we do. So those are the 4 markets. In terms of where we are, where we live, you can see that for yourself. We've done £9 million worth of capital investment in the last 2 years. We've upgraded, I think, 5 of our main plants. We've got sort of 10 plants, 7 of them largish. So we've expanded or upgraded all around the world. We've opened a new plant in China, which I'll come on to. We've made a couple of acquisitions, and we've extended patent coverage in a couple of particular areas. So it has been a busy couple of years. Some of that I'll come back to. And there's the 5 or 6 year record. You can make your own mind up on that. The only 2 things I would point to is you'll see a drop in sales. I'm going to talk about that. It's related to the large projects, and a 25 million increase in cash over the period, which makes us look forward in an entirely different frame of mind. So that's it on who we are, what we do, where we live, how we've done recently, and so on. Just pause while you absorb all that. It was quite a canter, wasn't it? And now briefly go through the results for the 12 months to November 15. I think there's no need to go through this in any detail. I'm very happy to ask any specific questions if you want to, but this seems to me to be more about introducing the business rather than the details of the P&L. Those are the headline numbers. 7% underlying, 8% down. I'll come to that in just a second. 9% earnings growth and cash on the balance sheet. There is absolutely nothing to say about the P&L. It is a very clean set of numbers. Margins are going up a bit. Tax rate at 24%. And there's even less to say really about the balance sheet. This is the cleanest balance sheet you've ever seen in your life. I'll talk about the working capital movement, which is unusual. We like paying a dividend. CAPEX, you see there, just under 9 million. There's a 500,000 disposals in there. Really, there's nothing, unless you particularly want to dwell on any of these things. This is a very clean business. So what I will do, though, is just go into one slide on each of the divisions and how we've done. A record year, I'm pleased to report, in metals filtration, although truthfully in constant currency it's a little bit down, and there's some one-offs in there. We had a very good 2014, and that we didn't expect that to repeat this year. There's two sort of aspects there. We made a small acquisition here in the middle of the year, and that will start to contribute in 2016 and looks very promising. It will give us some new technology, it'll give us some additional capacity. But the main story is the building of a Chinese plant for aluminium. So I'm just going to dwell on that. Aluminium growth in 2016, I showed you an earlier slide, is expected to be plus 6%, but all of that's in China. And the Chinese aluminium industry is moving from quite a lot of capacity in lower grade aluminium, the sorts of things that are for housing sidings and transportation, and into higher grade alloys for aerospace and can stock. So there is tremendous investment, and indeed there's overcapacity, as you will read, in aluminium. But if you are the supplier of premium filters to aluminium, this move up the chain is good news, because you cannot, first of all, you have to filter aluminium, and secondly, you cannot get aerospace grade aluminium from standard filters. The standard filter, of which this is one, simply dissolves when it is in contact with magnesium. So you have to use proper filters, and we have a patent on them, as I say. So that's all good. The downside, of course, is that it is ferociously difficult to sell this sort of stuff in China to Chinese car shops. They are very focused on price. We will not deal on price. We deal on value and quality, and therefore we've put in quite gentle plans for this business to scale up. We do not propose to fill it with low margin volume. We can shift some volume if we need to. We're very patient, really, and so you will see the top line growth. You may not see bottom line growth for a year or so until we really get going in metals filtration. The underlying basis of that business looks quite interesting. The other place I'm going to pause is here. Before I talk about the business, all the rest of it, I apologised earlier about underlying sales, and we don't like doing that. We don't like doing underlying. We don't like doing exceptionals, all that crap. But here we go. Those numbers, the large projects that I talked about, the 51 million, have run through at the rate of 6, 19.5, 5.5 in those 3 years. If you strip that out, you'll find that the underlying business has gone 50, 55, 65 or thereabouts. There's your underlying growth. The 5, 19.5, 6 is about 30 million of 51, and there's a little bit more in a prior year. There's about 15 million more sales of that work to go through. Were you sufficiently interested in Porvair to look at note 7 of the results we put out on Monday, you would also see, I mentioned the working capital earlier, that we have recognised 42 million of cash and only 35 million of sales. And what I haven't yet told you is we are extremely conservative in our approach to projects, which means that we will not recognise profits until we are very confident that these projects are working, the warranties are passed, and so on and so on. So we have a very strong balance sheet against these sorts of numbers. And as we say in the statement, you should expect to see that position reversing over 16, 17 and 18. And these are big numbers relative to the size of Porvair. So you will see that the margins will go up because profits will come out and sales won't go up. You'll see the cash position reversing because we're releasing provisions and not getting cash in. But looking forward, it gives us much more confidence to do it that way than to release the profits and hope for the best in terms of these projects. So that's it on that, but just, it's quite an important aspect of looking at Porvair at this instance. Leaving that aside, the rest of this business is going, really very nicely. It's been going on at about this rate for some years now. We've expanded capacity. We're doing very well in US, in bioscience. We're starting the year with stronger order books in aviation and nuclear than we had 12 months ago. I mentioned Seal Analytical, which is the water business, which has had its biggest ever set of orders from China in January of this year. So that looks reasonable for the year ahead. So outlook looks okay. We made an acquisition in December, not in these numbers. I'll just run you through that very quickly. It's quite a good example of what we do. These are filters for microelectronics. They're used at the tool head when you are etching silicon wafers. In the business of etching silicon wafers, any particles, any dust at all is a problem. So these are very high spec filters. They need to be 9 log, it's 99 with 9 nines after it, % filtration efficiency of 0.3 of a micron dust. The nice thing about high spec filters is they tend to generate high margins. Margins in this business approach 70%. Not all 70%, but that's what it is. This little one here sells for $250. This one is $1,000. I think you can just see from the picture that whilst inside the can it's quite sophisticated, you can see that there are reasonable margins to be had. So exacting technical specifications, high specifications. The market is about $70 million large. It's currently serviced by Paul, who are the biggest filter company in the world, very fine business, just bought by Danaher at 33 times, and Integris, who are fab shop suppliers. We think we can do a job here because the acquisition brings a nice product range to which we can add with our own media and very good distribution in some of the markets, not all. This is a guy who's just approaching his 70s, had decided that he didn't want to put another $1 million in to go to the next stage, and that's what we will do for him. We will end up, depending on how he does, we will end up paying between 5 and 6 times for this business, which is, we think, fair value for a business of this kind. So it's not huge, but it's something to go on for 2016. Now, the key rule in PowerPoint presentations is no more than 28 words a slide. So that should keep us chewing for a while. I try in one slide to encompass why I think we've got enough in the tank to keep going at these sorts of rates for the next 2 or 3 years. I won't grind through it all with you. Really, the day job at Porvair is about the accumulation of small steps forward. It's about having projects that are ready today, jam today projects, and it's about having enough in the hopper to allow a certain amount of attrition through that process, so that you don't have to have everything to come right to deliver the sort of objectives that you've got. So I won't go through them all, but the point is that we don't worry too much about market growth. That'll look after itself, but we do worry about market share and margin, and those are where the projects are targeted. And in every case, in every vertical, we've got masses to go at. So in aerospace, it's the new airframes. In energy and industrial, there's a good large contract pipeline. I don't think we'll sign anything this year, but 17 and 18 look positive. I've talked about TEM and their integration. In laboratory supplies, it's about new product development. We've got some interesting bioscience stuff going on. Talked about China in molten metals, and we've got some interesting new filters for lithium and for steel. There's plenty to go at Porvair. This is not a new product development process that is running out of legs at all. Which brings me then to my summary. The results you've seen. We've invested in new plants and in some acquisitions. We've got good order books. Large projects are going well relative to where we were 12 months ago. I would expect a similar year, and so I don't think there's any reason to not look forward with confidence. That's all I have. Thank you very much. Are there any questions? Yes.
You mentioned in the airspace that you do not do air filters. Why is this?
It's just where we came from. Air filtration in aircraft is a much less highly specified, as you would know if you've ever been in an aircraft, than fuel filters. There are 7 fuel filters between the tank and the nozzle, and hydraulics. And the higher the spec, the better the margin. So we just choose not to go into that. Yes, sir.
When you sell to the aviation business, are you selling to the airframers or to the systems providers, like the engine people and other?
Mostly to the latter. So you design with the airframe or the engine people, but then it's just a filter. So it goes to tier 1 or tier 2 or tier 3 for agglomeration into a bigger system. Yeah.
You're dependent on them winning the contracts with them.
Yeah. Often you work with them to win the contract. Yes. Yeah. Yes, ma'am.
You talked a lot about the revenue side, but given how tight your margins are in some of your areas, how are you managing the risk on the supplier side, specifically with the commodities markets, say around wood or metals?
Yeah. Specifically on commodities, our materials cost as a proportion of sales is surprisingly small. 10 or 12%. So we're not exposed to polymers or metals or anything. I mean, it matters, but we're not largely exposed, with the exception of metals, where it's more like 30%, which would be more standard for a manufacturing business. So most of our costs are therefore people, and they are relatively fixed. We are certainly not immune to a downturn. The downturn that affects Porvair more than anything else is a destocking recession, such as happened in February and March 2009, because, as I said at the beginning, if you stop running, stop making cars, stop taking off your aeroplane, everything stops, and there's nothing we can do about that. So we don't worry about it too much. When it happens, it happens. So people, we have some flexibility, but on the whole, that's our main cost, and that's our lack of flexibility. Yes, sir.
You spoke about growth earlier. In terms of acquisitions, you said it was slightly tricky. Could you elaborate a little bit more?
Yeah, so there's two things in our world on acquisitions. First is that good filter companies, as I hope you've seen, are very nice cash generators. They just don't come up all that often. And when they do, if they're of any size, they get snapped up by a changing cast of 5 or 6 buyers, 4 trade and 1 private equity. And they go for, on a long range, multiple is 11 times EBITDA. Now, we simply would never pay that. You've got to be brilliant to make money at those sorts of levels. So that leaves us either floundering or looking for value elsewhere, or trying to be a bit cleverer, trying to join dots that other people can't see. But mostly it leaves us in smaller deals, which actually we're much more comfortable with anyway. We don't like betting the farm if we can avoid it. We've done it once, but it was a long time ago. So small bolt-on deals are better for us, less risky, but they are harder to find, and they take just as much work. So that's really what I meant.
So in terms of your organic growth then, what's been the rate over the last couple of years?
9% CAGR over 5 years. And over the last 2 years, we've gone from, is it 85 to, I'll have a look here, 82 to 96 million. So I can't work that out. Yes, sir.
Roughly how concentrated is your customer base?
Biggest customer is Alcoa, $6 million, £4 million, so 4%. After that, no one's close after that.
And what are your main routes to market in terms of channel?
Yeah, it's a good question. It depends. So where we have a decent position, either regionally or globally, we go ourselves. Aluminium would be a good case in that. Where we don't, we use distributors. And we tend to use distributors either alongside ourselves or standalone distributors where, for cultural language reasons, we don't feel comfortable. So China is all through distribution, for example.
So what's roughly globally, what's the split?
I don't know. I mean, I think 40% direct, 60% some sort of intermediary or distribution, probably. Yeah.
You talked about 9 million CAPEX over the last couple of years. Do you think that'll be similar going forward, or maybe you've got some of it out of the way?
Yeah, no, we've got one more year, we think. We've got a couple more plants where we're running out of capacity. We need to do something about that. So we think it'll be about 4 million this current year, 16. The base rate of capital is about 1 million. Just if we chose to do nothing, maintenance. Must spend stuff. So one more year at 4, and then we'll see. Then we've got a whole set of new plants, and we shouldn't need anything like as much for 2 or 3 years. Yes, at the back, sir.
Yeah, a lot of companies choose to add back amortization acquired arising from acquisitions. You tend not to do that. Is there a specific reason for that? I know it keeps the balance sheet very clean, as you indicated, but it might be less flattering on the P&L account.
Yes. Did I mention we're very conservative in our views? I mean, that's the answer. We don't, that we've spent it, we charge it.
So you try and allocate more of any goodwill to goodwill as opposed to looking for other intangibles to dump it against.
Yes. Yeah, I mean, we are very plain vanilla, I'm afraid. Yes, sir.
Could you just tell us who your largest shareholder is and what your relationship is? Is it a Spanish company?
Giorgio Girondi, no, he's an Italian privateer. He runs his own filter company called UFI, which makes automotive filters, spin-on filters, the things you get at Halfords. Extremely wealthy private individual who knows all about us. And in 2009, actually I mentioned a destocking recession in 2009 when every manufacturing business in the world profit warned. he picked up his stake at 60p. I don't see him all that often, once a year or less. He's now, as you might imagine, very supportive. You know, and he knows what he's talking about. I mean, he's an interesting guy to have around. He's not on the board. He doesn't, you know, he's not privy to any information. He's very interesting. His business is based in China. He's very interesting about China and geopolitics and filtration in general. Yes, sir.
Could you tell us more about your manufacturing facilities? Where are they? How many you employ and so on?
Yes, we employ 700 in total. There's a thing in your pack with exactly where. Well, we've got 6 facilities in the US, with the 2 large ones in North Carolina and Virginia. We've got 3 in the UK, 1 in Germany, 2 in China.
Lovely.
All done?
Thank you very much, Ben.
Thank you very much.